Hi everyone. Now that 2022 has come to an end, I'm really excited to share with you my top 23 stocks to buy for 2023. So this is going to be a brief overview of all of the stocks. I have longer videos on each of these stocks and why each of these stocks is a buy. I'm just going to do a brief overview of each of them here. So if you want a more comprehensive analysis of each of these stocks, please go find them on my channel. I've got a video on each of these. I think you're going to like those. So the common theme among all of these stocks is that they are relatively cheap. So I looked at either the price to earnings ratio forward or the price to free cash flow, and I'm not trying to buy expensive stocks in 2023 because I believe the Federal Reserve is going to continue pushing interest rates higher to combat inflation that's going to be persistent. I believe inflation will remain high for the first half at least of 2023, moderating in the second half of 2023. So let's get into these stocks. So I have them in groups of five. The first five stocks I have here is Salesforce, Mercado Libre, Airbnb, Microsoft, and Alphabet. Of course, Salesforce is the company that helps other companies with customer relationship management. That's going to be crucial for businesses in 2023. Their stock is suffering because of some senior management exiting and bringing the price down to a relatively inexpensive valuation. Mercado Libre is known as the Amazon of Latin America, Amazon and PayPal of Latin America, and Latin American e-commerce spending is expected to rise the fastest in the world. So I like Mercado Libre for that reason, and the stock is inexpensive. Airbnb is going to benefit from the continued unleashing of pent up demand for travel. Microsoft, I can't hardly think of a company that's more essential for the way we work than Microsoft. And then Alphabet, which stands to benefit from rising advertising spending in 2023. In the first half, ad spending may be pressured, but the second half, ad spending could rebound. And if you're a business trying to connect to customers, you've got to use one of Alphabet's services, whether it be YouTube or Google Search or Gmail. They've just got widespread exposure to how consumers start a purchase decision. All right, let's go on to my second set of five stocks on our path to the top 23 stocks for 2023. First one on this list is Chegg, which is an education technology company with a strong competitive advantage. It's got over 80 million pieces of proprietary content it has spent years building. It's going to be difficult for any of its competitors to encroach on its business. Then let's move on to Visa and MasterCard, my next two stocks to buy in 2023. They've done really well in 2022, and I expect them to continue doing well in 2023. These businesses generate very strong gross and operating profit margins, and consumer spending on a nominal basis is likely going to rise worldwide in 2023. Visa and MasterCard take a percentage of each transaction as revenue, so that's going to be a tailwind for them. PayPal, for that same reason, PayPal takes a percentage of the transactions, and it offers a strong convenience advantage to consumers. Instead of putting your payment information on each website you go to, you can use PayPal and then use your PayPal login for each of the websites. I think that's going to be a tailwind for PayPal over the next several years, 2023 included, in attracting customers to their website and their platform. Palo Alto Networks is another one of my favorite stocks for 2023. I'm bullish on the cybersecurity industry, and Palo Alto Networks is one of the leaders in that industry. Online security is becoming more and more essential. I expect that only to become more so in 2023 and beyond. Let's go to the next set of five stocks, starting with the Walt Disney Company. The company struggled amid the pandemic because it relies on bringing large groups of people together. Now consumers are visiting its theme parks. Its theme park segment is more profitable than even before the pandemic, even though it's not experiencing as many visitors, so it's making more money off of each visitor. Meta Platforms, boy, 2022 was a tough year for Meta Platforms. The stock was down more than 70%. 2023, I expect, is going to be better as it laps some of the headwinds from Apple's privacy policy changes and it adapts to the challenge from TikTok. Netflix is another company that struggled in 2022 as reopening took consumers away from home and spending their money on out away from home experiences. I expect that trend to slow down a bit in the second half of the year, and Netflix could benefit as it's a very cheap, relatively cheap option for consumers to entertain themselves for less than $20 per month. They can have entertainment all month for the whole family. Nike is another one of my favorite stocks for 2023. Nike's revenue struggled in 2022 because of lockdowns in China. The Chinese economy is slowly reopening. That's going to be a tailwind for Nike. Also, Nike is moving more direct to consumer, cutting out the middleman. That's expanding profit margins. That's going to be good news for Nike investors. Finally, on this page, Adobe stock. Adobe is one of the leading creative solutions for digital creators. It made an acquisition that some say it paid too much for, but that's going to help it attract more. It's going to be more user friendly, which has been one of the knocks on Adobe. It's really good for high end users, but for those entry level digital creators, it's got a little bit of a challenge there on the beginner front, and so these acquisitions could help it gain more traction there. All right, moving on to the next selection of five stocks, starting with eBay and Etsy. These are online e-commerce sites that bring together buyers and sellers, and they each take a percentage of revenue from the transactions. I love the asset-light business model. I love that neither Etsy or eBay deals with fulfillment or logistics. They just take a percentage of each sale, and that's a lucrative business model that I think is going to do well over the next few years, 2023 included. DocuSign, another one of my favorites. Management says that they've saved 6 million trees in it as part since they came into existence. They again offer a huge convenience to customers and businesses. Instead of having to bring both together to sign a document, you could do it digitally through an e-signature. I think this is going to be a continued grower over the next several years and a profitable business model as well as it scales. The next one, the Home Depot, thrived during the pandemic as people spent on home improvement like there was no tomorrow. And that still continues even though the do-it-yourself segment of home improvement is slowing down considerably. People are now moving on to hiring pros for bigger projects, those that they delayed in 2020 and 2021 because they didn't want a bunch of people in their house when there was a potentially deadly virus in circulation. Now they're taking those projects on. Starbucks is another company that's going to benefit from this away from home trend. People going out more, going to school, going to work, working at least a few days of the week instead of being at home all 5 days. Starbucks also has a very meaningful exposure to the Chinese market. And as that Chinese economy reopens, Starbucks stands to gain that tailwind as well. The final three stocks in my top 23 stocks to buy for 2023 starts with Target. The company has done an excellent job in renovating its stores, adapting its stores to take advantage of its brick and mortar presence as a competitive advantage instead of it being a headwind. Recall that Amazon was eating all of these brick and mortar retailers' lunch. Target has found a way through its several same-day services, one of which being buy online and pick up your purchase in a Target parking lot, to use its stores as an advantage, right? You can buy online and go pick up your order within a couple of hours instead of having to wait a couple of days if you're buying from Amazon. That's going to be a tailwind for Target as consumers have voted with their dollars, and spending using those channels has been very popular for Target. Domino's Pizza, another company that will benefit as consumer budgets get pinched inflation is causing the price of everything to go up. Consumer budgets are shrinking, and Domino's is a really inexpensive way to feed your family. For less than $20, you can feed a family of four, have the pizza delivered to your home. It's even cheaper if you go pick it up at your local Domino's. You save on that delivery expense. So I think consumers are going to look for these less costly options as 2023 moves along, and as they start to spend some of those excess savings they had during the pandemic because of all the stimulus checks. That money's come dwindling down. Options like Domino's are going to become more favorable in consumer eyes in 2023. And finally, 3M, the industrial conglomerate that sells thousands of products worldwide, trading extremely inexpensively. 3M has products in all different categories, extremely diversified international business that stands to benefit as they push along price increases and expand their profit margins, because they already experienced a pinching of profit margins as inflation grew. Now they've increased their prices and they're going to benefit from that expanding profit margin. All right, there you have it. My top 23 stocks to buy for 2023. Again, I know I went through each of these really quickly. I've got longer videos on all of these companies. I promise you, if you go looking on my channel, you'll find a video or several videos most likely on each of these companies. I've been following them for a very long time, so I encourage you to do so. But these are my favorite 23 stocks to buy for 2023. That's all I've got for this video. Thank you for watching. I hope you have an excellent year in 2023. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.